Good morning, traders and traderettes. Welcome to the last week of April. Thanks for joining me today. It's 8:03 a.m. Chicago time on Monday, the 26th of April, 2021. This is episode number 1980. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So, let's dive right into the pre-market summary sheet for today. Market stance neutral, just sitting sideways at the at or near the highs of Friday. New all-time highs on Friday. The leader this morning is the Russell, the small caps up 0.5%, followed by silver. The Dow is up 51 points. Crude is the laggard. Crude trading at 60.94 in the June contract. Remember, crude has rolled to June last week. It is down $1.35 and off 2.17%. The S&P basically is about unchanged. It's 1.25 points down. 1.25 points up, or 0.03%. So not much to say there. Crude is the one getting beaten down. Copper's strong. And of course, Bitcoin. Let me move my face over here. Bitcoin and Ether are taking a small pop after getting hit last weekend. So that's where we are. I hope you had a great weekend. I hope you rested up. We're going to be enjoying some amazing weather here over the next couple of days in Chicago, where it's reaching 83 degrees Fahrenheit. What is that? That's almost 28 or something like that Celsius. So it's all good. In terms of what the S&P has done overnight, we've traded 128,000 contracts. 91% of the inventory is above the close on Friday, so 91.7% of the inventory is long. Very small range, relatively small range this morning at 12.25%, and the point of control is at 41.70, 75, 71. So we're just snaking around there. It's currently trading at 41.73. So completely sideways. We've seen this kind of open in the last week or so. We've seen it consolidate above the prior session's point of control, and that's where we're opening. Notice the rotations are falling. Volatility's falling. The S&P now enjoys a standard rotation, or one standard deviation of its rotation is up to 4.75 points. That's considered a normal rotation, up to 4.75 points. The most common rotation right now in the S&P is 2.5 points. We're back to 2.5 points for the mode of 1 minute rotations on the S&P 500. Quite amazing. We're back to where we were historically. So basically the S&P's rotational statistics have reverted back to where they are in the long term. Today, one of the things you need to pay attention to is the Tesla aftermarket report. Tesla is expected to report 79 cents per share and 10.29 billion in revenue. That's expected to come right after the close. Tesla is a big component of the NASDAQ and the S&P, and that's something to look for. In addition to the Dallas Fed manufacturing and the Bank of Japan interest rate decisions, which are not huge for this week. This week, the big releases are really relatively limited today and tomorrow, but Wednesday we get the Fed interest rate decision at 2 p.m. Eastern with a press conference at 2:30. That's going to be one that the market will pay for. In Europe, German GfK consumer confidence Wednesday morning at about 2 a.m. Eastern U.S. time. That's about when the Treasuries open. Thursday, we have GDP. And then Friday, consumer confidence out of Japan, personal income, personal spending. And that wraps up the week. And so we start May. We start May on Saturday. And then we will have the non-farm payrolls next Friday. Not this Friday, next Friday. One thing I wanted to point out while we're here is that I'm getting my second shot of the Pfizer vaccine this evening, and I know from friends and others, including my wife, that it has a relatively strong impact. And so there may or may not be a trader bite tomorrow if I'm not feeling so well. It's supposed to give you like a minor flu. And if I'm not feeling well, then there won't be a trader bite. I'm going to be staying home tomorrow and just relaxing while my body absorbs this vaccine. So just a heads up. Let's move on to what was expected on Friday. Here's what we're looking for on Friday. I was looking for a small dip. Excuse me, I'm going to just... Looking for a small dip on Friday. Was looking for it to pull back to about 41.35. And then to 41.35, 41.30. This zone that comes to us from earlier in the week. And I was looking for it to turn, take out the overnight high, which was 41.50, and to just run to 65 at least. And as I point out right up at the top, then it would likely target 75, which has had quite a bit of liquidity over the last few days. And so that's where that stands. It's likely that it would likely push higher given what we have done. The secondary, is a push through the overnight high of 41.50. Excuse me. Push through the overnight high of 41.50 and then a drop to 41.04. That did not happen. Here's what things looked like on interesting. Here's what things looked like on Friday. Again, looking at the same bar strength here, or bar pixel resolution, you could see that Friday had very few rotations. It was a very directional trade. Very few counter rotations compared to Thursday's, which is full of rotations, lots of opportunities. Friday was one of these buy and hold kind of days. We did have some decent zippers to lean against to get long only. You could see that it opened down here at 32.75 and put in a low immediately at 31.75. So it opened, it pushed down to 4 ticks, and then it bounced straight up to 41.3850, which is the opening swing high. Deep pullback, and then from there it just jetted to 48, and then from there, it just kept going and going and going. So saw some weakness as it pushed into this area here. We saw some expanding downward rotations down here. You can see the rotations starting to expand lower on Friday, and I expected it to kind of stall out into the close, but instead it pushed directly into 41.8675 for new all-time highs, and then you have the rebalance on the close, the margin closures and things like that, settlement. And so we migrated the point of control to the upper end of the range. We have a key low volume node at 64, which happened to be the RTH VWAP as well. So this area between 65 and 60 is one to watch, is one that we should watch. for today. The overnight session, and by the way, the Delta really moved with price on Friday. It moved pretty well on Friday with price and pushed higher. So this had pretty good participation. Here's the 30-minute chart. The 30-minute shows a pretty strong push. The market profile chart for yesterday shows a string of singles beneath. So this is the market profile chart. You could see from 41.49. If you're a convergent and are getting the master levels, you'll see 41.49 be marked as the start of the singles, all the way to 41.60. This is an area that has not been explored very well. That's expected to be checked at some point. As soon as there is weakness, 41.49 becomes a key target, which is also the mid-century, around the mid-century figures. So this is an important area to note, and there's a stock zone there. So the overnight session completely sideways, pretty tight range, sitting sideways with the VWAP, full session VWAP, full session mid, and the overnight point of control overlapping each other in the 41.70 area. And this is where we're sitting currently. We're just above it at 41.74. Expecting, it is Monday, so let's temper our expectations, expecting a slow start to the day, expecting it to chop around for a little bit. We just made new all-time highs, and it remains to see how much energy the buyers still have to continue to squeeze to 4,200, or if they're going to back off. Remember, Wednesday brings us to the FOMC, so today is one of those days where we're here, we're focused, we're paying attention, but I'm not likely to interact with the market on the open or within a few minutes of the open. We just need to see what this thing wants. The delta's positive, but it's not that positive. So the other piece that we need to look at is what it did last week. Look at last week, a perfectly balanced profile. We ended up migrating the point of control up to 41.51, which we have to keep an eye on. Again, 41.49 is the bottom of the single prints. 41.50 mid-century figure. 41.51 is the MC point of control. This is a magnet area. This is a magnet area beneath where we are now, and it's only 23 points below. We managed to one time frame up again last week, but you can see the weakness between last week or 2 weeks ago and the week before. 3 weeks ago and 2 weeks ago, you could see the migration of price was pretty strong, right? The market did not bother to pull back. And then last week, we almost tackled the weekly low. We missed it by 4.5 points, coming down from 41.83. So we ended up putting in a higher low. So the one-time framing on the weekly is still on the buy side. In other words, the buyers are doing a good job defending these prior lows and migrating value higher. You can see the point of control shifting from 40.67.75, which is the expected target. And relatively quickly, by the way, if we get below 4,100, 40.67.75 was the expected target. That's why it's the expected target. It's because the point of control is there. And then we migrated that to 41.23, which we tested last week, and then we moved it to 41.51, and we started one-time framing up on a daily as well. This looks weakish to me. That's the conclusion. We pushed the high. We moved from 41.1050 and pushed through to 41.86.75, and that does seem like it's a relatively good push, but look at the overlapping daily bars. See how those bars are overlapping each other in here? There's some balance setting in. In other words, as buyers push prices higher, more and more sellers are becoming activated becoming activated or seeing a reason to sell into the buyers. These could be buyers from well below. These could be intermediate time frame buyers liquidating. Could be short-term sellers initiating. We don't know. We don't care. All we care about is the migration of value and how the market is processing value on the way up, how it's discovering price, and to come all the way back only to push the high by 3.25 points before falling back towards value. To me, this looks like it is weakening. It looks like it is just petering out. And Friday had lower volume than the other days of the week, except for Monday, I believe. Actually, Friday had lower volume than all days of the week. And so here we are at the upper end of balance. We're above 41.51, so we are still looking swing bullish. We don't see a reason to be looking for structured shorts at this point. From a swing basis, we're well ahead of our averages. We're one-time framing up on a weekly and daily, yada, yada, yada. The market needs to make a pretty good impulsive move down with a weak pullback for us to start to really hammer on the short side in structural trades versus scalps, looking for that 40.67.75. That's the summary of what we've got here. And you can see it right in front of you here, how it nicely migrated through price, a little pullback. But from here, really a lot of hesitation, many closes between 41.59 and 41.75 last week. So you had this close here. This close is very similar. This, all of these fall into a kind of a single line right here between 41.59 and 41.74. This sandwich area has gotten a lot of closes, and we're currently trading in that area. So this is additional reason. This is an additional reason why I believe this morning is likely to be choppy. So temper expectations, save your bullets, and fire them when you see good structure for you to follow, or good setups or high confidence setups. So let's move on and look at the current order flow in the book. This is Edge Pro X. Let's get rid of this. This is Edge Pro X. We're just going to look at what areas have liquidity and what areas do not. We see some resting liquidity here at 76 above. We see some resting liquidity at 69.75 below. But as you can see in that liquidity, you don't see a large block in there. It moved right down here. You don't see a large block in there. It's just riffraff, small pieces. We do see a large block in the bid down below at 69.75. It doesn't mean that it won't trade through it, but really, I'm not seeing too much in the book all the way down, or stable bids in the book all the way down until we get to this 52.53 area. This has been around the whole for the whole session, and this kind of coincides with that 41.50 area that I just talked about. So looking at the full depth, this is real time, this is rhythmic on Edge Pro X, and we can see as far up and as far down as we want to scroll. And then looking up above that, 41.8950, it has some liquidity, but 172 contracts is not very meaningful here. But this 89.50 is made up of almost one contiguous block. So you can see the highs 86.75 is marked by the cloud levels here, and it's really not telling us very much. Well, there goes the 76. You see how it kind of pushed right through, walked right through. There was not a collision here. You see that? There was no collision here. And this is why MBO data is so important for especially traders who rely on order flow, to be able to see where the large blocks are in price is really helpful. You know, if you're sitting in front of a large block, that may be a decent position to have. If you're sitting behind one, you're probably going to get run through, that sort of thing. Okay, so looking at the heat map, not so much to look at. Let's switch gears and look at what's expected for today. And I know today's, the Monday trader bites are a little bit longer because we're laying out the week and laying out what is likely to happen next. Let's look at what's expected for today here. So the gray bands that you see on the screen here are called stock zone levels. And these are predetermined areas where we expect the market to have a likely push one way or another. We have been clustered here in the 66 to 73 area, 72 area. We're kind of clustered in here all night. And beneath us, we have 59 or 60. And of course, we have this thick band down here that represents that 49 to 52 area or 49 to 51 area. This is a very important area for the buyers to hold. The expectation for this morning, inventory being 92% long, the expectation is an open auction, pretty choppy, looking for it to come back towards the VWAP mid and the overnight point of control. Chop around in there. There's a little bit of a zipper down below in the 67 area, so I'm looking for the 67 to hold here if it is tested, and then I'm looking for a push through the overnight high for the overnight stat, and then a test of 83. Not expecting very much in terms of range today, expecting it to be pretty chill. So that's the primary scenario. The secondary scenario, is an open auction that immediately pushes to 41.77, squeezes up there potentially to 83, impulse down. I'm going to put a little impulse arrow down here, impulse down into the overnight point of control. Historically speaking, and past performance is not indicative of future results, of course. Historically speaking, the S&P is likely to tag its overnight point of control. I think it's like 84% historically. Again, past performance, not indicative of future results, but expecting it to tag this overnight point of control, squeeze through the 67, and then start working. As always, the sell scenario in a bull market has better payouts, more risk, but better payouts. And that gives us more range and more of an area to chew through in those single prints. Not expecting it to run all the way down to 49. Very tempered expectations for today. So just go with that. One last thing, piece of wisdom I wanted to share with you today. I haven't done a trade wisdom session in a while. This isn't one. I know there are 4 minutes to the open, but I saw this somewhere and I thought this was really good to remind traders that today could either be day one of trading right, or you could trade right one day. So you can always say, one day I'm going to do this. One day I'm going to do this. One day I'm going to trade better. One day I'm going to make money. One day I'm going to do something. Ask yourself, what needs to happen to do the work to make the turn today? So today could be day one of you doing what you know you need to do to trade right, or you could trade right one day. And it's a decision and a commitment that has to be made. There's a lot of work to be done to become a proficient trader. Why not start today? Good luck.